Take us through how this deal is structured.
We are essentially aiming at a total fund size of, in dollar terms, about $100 million, of which, as you mentioned earlier, both ARM and Kinnevik, our Swedish partners, have committed our own funds of $15 million apiece. The idea is to raise the remainder from local and some international investors. The plan is to try and take advantage of the very strong deal flow we have and to actually engineer a quicker first close than we originally envisaged. So we're hoping to reach some first close within 4 weeks or 6 weeks so that we can basically start putting monies to some of the deal flow that we've got, and then come back after doing a couple of deals, and then we'll raise the subsequent funds thereafter.
When do you plan to launch the fund, and is this really the right time to launch such a fund?
That's a good question. As I said earlier, we plan to launch the fund, or what I call first close, within 4 to 6 weeks, all things being equal. In terms of the timing, we think is an excellent time to launch the fund. It's always been a challenge for the country, Nigeria, because our listed markets represent only about a quarter of the total GDP of the country in terms of value. So it always leaves, and has left to date, about 3/4 of the economic activity of this country in the private domain, not available to investors through public markets. We think not only our fund, but other funds that set up in the private equity world are the right stimulants to basically make good structured investments in the private sector, show that these can work quite well, and then hopefully bring them across via listings and the like onto the public markets down the line. In terms of valuation especially, you can imagine that with what's been going around globally and particularly in the country, we are now getting, if you like, a slightly more realistic and sensible approach to valuation all around. So again, that's another key thing for private equity, of course.
Will this fund give Nigerian investors opportunities in the markets that Kinnevik already has a strong presence in?
When you raise a fund, you have to really pay more heed to your investors. Although ARM and Kinnevik are putting money in the fund as investors, we're primarily the promoters or sponsors. So it is the interests of the other investors primarily that we have to make sure we do. So the fund is not being arranged to, shall I call it, either prosecute ARM's own individual desires or Kinnevik's. It's really based to make a good return for all investors in the fund, which tends to mean that therefore it's the fund's criteria. Primarily we bet on very good management teams. We're very comfortable that when you get a management team that knows what it's doing and is able to execute its plans, that's always a winning formula. It's more of a winning formula here, where unfortunately we tend, just in general, to be quite weak in management. We obviously have an idea of some sectors that we like to some extent and some that we're a bit more wary of. But it's usually management teams that have a good organization, that has good growth potential. Sometimes it may be coincidentally an area that Kinnevik likes or has experience in, and it may not be. Where there is either Kinnevik or ARM previous experience, I think it's one of the things that the fund brings to the table. That is the ability to use our networks, if you like, and bring in more expertise or talents or whatever is needed by the investee companies.
Take us through the sectors that we're likely to see ARM's presence in the West African region, besides Nigeria.
Well, if I follow the argument that I made earlier about the fact that we have a highly lopsided public market, which is only focused on a number of sectors, clearly we would be interested in investments in areas that are not represented. Those would include telecoms.
Yeah.
That would include largely, for instance, agriculture or agro-processing. To a fairly limited extent, and I say this with great care because oil and gas is very wide and there are all sorts of areas of risk and so on. So within the area that a fund with a relatively limited budget can play, and as you know, in oil and gas, the budgets are quite huge, we would also look at some of those areas or support companies to the oil and gas companies. So it's not a sector fund. It's really, as I said, based on good management's ability to grow and where we know we can add value.